Now let's get to today's feature segment on investing in lead generation stocks. Tom Donahoe is with us, CEO of Level Agency. It's great to see you. Thanks for being with us.
Good to be here.
You'll have to explain what lead generation stocks are as we sit at highs for the NASDAQ and the S&P. What are you talking about?
So in the 21st century digital economy, where people are not just buying things online, but researching more expensive things online, the world is not just about Amazon or Google or Facebook. There are hundreds of companies, some are publicly traded, that are essentially the machine, the engine by which consumers find goods and services. And so those companies we call lead generation companies.
So that would be names such as?
Some of the publicly traded ones, you've got LendingTree, EverQuote, and some smaller ones that I'm pretty
Right, and I saw you had ride sharing in there, right, as a concept at least. People are looking up things,
So
right?
It's not just, in the past 10 years, big industries, the insurance marketplace, mortgages, for-profit education. Those are bigger sectors that have been living and dying by lead generation. They buy consumers from these companies. But a ton of other industries, like ride sharing or a lot of apps, how they get users, go to these companies to get consumers. So it's not just with the death of storefronts, but most of the things that you and I buy in terms of consumer goods, but also things that we research that are really expensive, cars or financial products, these are the companies that are matching us with the sellers, with those companies.
Right, and you mentioned EverQuote, EVER,
Yep.
right? What a run it's had. Tell me a little more about that one.
Yeah, they were one of the darlings of 2019, I think around a 700% return for investors. So it was a home run for investors. This is not an indictment of the company or the executive team. I think they run a great business. A lot of my peers are huge fans. Obviously, they're one of the leaders in their industry.
Right.
But I've got to say, I think it's around $43 today. I think they're fully priced. And so from an investing opportunity standpoint, I think there's a few others that might for 2020 be a slightly better bet.
Would that be Fluent that you talked about, FLNT?
Yeah, I love the lesser known companies. And again, it's a smaller stock. I don't know if some investors may or may not love the sub $5 plays.
Right.
It's a smaller company that's, again, one of the, what I call lead generation or an engine in the digital marketplace. They match buyers and sellers, consumers and products. So they're in the lead gen space. They're smaller, but they're more diversified. They're pretty efficient. I think they're doing $1.5 million per employee in revenue. They had a great 2018. They'll probably break even in 2019. They're a good small stock that most investors don't really think about when they start paying attention to the bigger lead gen players like an EverQuote or LendingTree.
Do you have thoughts on Uber and Lyft and those kinds of ride-sharing sort of names? I heard Juno sort of step back. I mean, that was a competitor in the business, basically step back. So you still have these names.
Yeah,
Do you have thoughts on those at all?
I believe between Uber and Lyft, whichever board blinks first in terms of deciding that, hey guys, we have to actually make a profit this year, whoever blinks first, the other is going to win. There's just not enough stickiness or brand enthusiasm. So you and I probably both have both apps on our phones. The second that one board says we've got to increase prices, every consumer is going to go to the other app to save a few dollars per ride. So I think that's going to happen.
I see. Okay, so we'll watch for that. I mean, we've seen them doing a little better, and Uber in particular.
Sure.
So they've been fun to watch.
I think it's whoever blinks first.
Okay.
Yeah.
And then on the downside, or on the more risk side, you're looking at a very popular, widely held name, and that's Facebook.
Yes.
Why is that? Where's the risk and why?
So here's not the crazy thing, but it's probably the best example of that famous John Maynard Keynes quote, that the market can remain irrational longer than you can remain solvent. I always love that quote, but this is probably one of the most irrational examples of a company's performance having no relationship to what the market is pricing their stock at.
So when we see Facebook today, right now, it's sitting at 217.82. It's virtually flat today. I mean, we're talking later in the show about the EU regulation that it faces. But when you say it's at risk for 2020, does that bring in some other names as well that have been popular? I mean, is it not just a Facebook story?
It might, but let's just focus on Facebook.
Tell me.
The risk is this. They had a nearly perfect Q4. They didn't just meet, but they exceeded everyone's expectations. 25% top line growth to 21 billion, 8% EPS growth and monthly active users. So they not only just met, but they exceeded everyone's expectations. They hit a home run. You could not do a better job in Q4. And the day they announced, they took a 10% hit. So even if they are perfect next quarter and in 2020, even if they're perfect from a financial and operational KPI, they could still take a hit. So I don't think their performance financially has any bearing on what the market's going to do with the stock.
I understand. All right. Tom Donahoe, great to see you. Thank you so much for being with us, CEO of Level Agency. Thanks for joining us on the show.